Hello and welcome to this week's market update. Today is 25th of February. So we'll look at what the price action is telling us for S&P 500, NASDAQ, what levels we should be watching, what the momentum indicators are telling us, given the narrative that inflation is hotter than expected at the moment. So forth and so on. So you're looking at a daily chart of S&P 500. So this was a rough week for S&P 500. It was down around 2.67%. Since reaching a high of around 4,200, S&P 500 has been gradually moving lower. And I think the slide started from 3rd of February when the jobs report came out, which was hotter than expected. Since then, we got 3 inflation reports, the CPI, the PPI, and the PCE, all showed inflation moving up in the month of January. And as that happened, stocks started to move higher because the market is now expecting Federal Reserve to increase interest rate above previous expectation. Previously, market was expecting a terminal rate of around 5%. Right now, the terminal rate expectation is around 5.5%. The question is, does it stop there or does it go higher to maybe 5.75, possibly even 6%? So at the moment, the narrative in the market is inflation is hot. Federal Reserve would have to do a lot more to control inflation, which may not bode well for stocks. All right, so let's look at price action, levels, momentum, and all that good stuff. So if I bring in the moving averages, you can see that SPY has now lost the daily 20, the daily 50 EMS, but it managed to find support at the 200-day moving average, simple moving average. You can see SPY had consolidated above the daily 20 and 50, but then the CPI reports pushed it below. And you can see the 2 moving averages are beginning to curl, something like this. The question is, is this gonna start a new move to the downside, like something like this? They're gonna cross and then move to the downside, or is that going to be something like what happened in October? Okay, fine, they flatten out, they cross, but then move. We don't know yet. So this is to be seen, but at the moment it's above the 200-day, but below the daily 20 and 50. What about the moving momentum indicators? You can see that MACD is moving lower. It's heading towards the 0 line. If it crosses below the 0 line, that would be negative. RSI, you can see started to move lower. RSI has fallen below the 50 level. This black line is RSI 50 level, which is right here, and it was around 4,079. Ideally, when RSI is below 50, momentum is negative. You can see RSI was above the 50 level, crossed above the 50 level right here, around 6th of January. So ideally, this was a buy signal on a weekly time frame. And then we got a sell signal right here. So when the buy signal was issued, S&P 500 was around 38.95. The sell signal was issued around 4,079. I mean, I'm calling it a sell signal. Ideally, it is a shift in momentum. Momentum has moved from positive to negative right now. Momentum had shifted from negative to positive, because normally when you see a change in momentum, you then take the direction of your trade would be in that direction. So in other words, at the moment, the direction should be on the short side. Why? The RSI RSI is below the 50 level. Right here, RSI had moved above the 50 level, so the direction of the trade would be on the long side. And you can see right here, RSI had moved below the 50 level in mid-December, and the direction of the trade would have been on the short side. The price at that time was 39.95. So if you had gone short there and covered your long around 38.95, you would get about 100 points. So at the moment, on a daily basis, our momentum is negative. Now, what are some of the levels we should be watching out on a daily time frame? So if I bring in the levels, now the near-term level is this number, around 39.25. There are two reasons for it. One is that if you draw a fib from this low in December to this high, the 61.8 is this level, around 39.25. You can see right here, 39.29. Now, 39.29 is also a support level from a channel perspective. You see, SPY, S&P 500, it traded between this level and this level. So now that this level has been breached, a full measured move gives us this level right here. So you can see this level has two support, one from this parallel channel and one from Fibonacci. Also, if I bring in the moving averages, you'll see that this level is also where it's close to the 200-day. The 200-day moving average is just above that level. So the 39.30 is a important level on a near-term basis. If that level is breached, then the levels below that would be 38.63 and finally 3800. Now this is a crucial level, and we'll see why this is the case from a weekly perspective. So on a daily basis, momentum is definitely weak. Level to watch would be 39.30 on a near-term basis, and then 38.63. Resistance would be right here, which is around 40.65. Now let's look at the weekly time frame to see what can we see. Now I'll hide the now on a weekly basis. Now on a daily basis, I said this is an important level, which is the December low, right? Around 3800. Why? Because on a weekly basis, you can see that level has a weekly higher low. This was the low, and this is the weekly higher low, which is around 3800. So if you look at the daily basis, if S&P 500 were to close below this level, then on a weekly basis, the higher low, this is the weekly low, and then this is the weekly higher low. So if S&P were to close below this level, then this higher low will be invalidated. So that's basically what you see. So this is an important level from a weekly perspective. What about the momentum indicators? Look at where RSI is. RSI closed at 49.48, just below this important level, the RSI 50 level, right? Because in early January, the momentum on a weekly time frame shifted from negative to positive, and RSI was above that 50 level until this week, when there is now so let's just say that it's in a neutral area, and because it's just marginally below 50, so that's why I'm calling it a neutral area, neutral zone. If it remains below the RSI 50, then the momentum will shift decisively from positive to negative. And when that happens, we generally see lower prices. If you look right here, when RSI dipped below 50 and remained below 50, we saw generally lower prices. There was a short period of time when RSI was above the 50, but generally, RSI was below the 50 right here. So the question is whether we're going to make a decisive move and then remain below the 50 level. If so, I would then expect lower prices. But if, on the other hand, RSI is able to rebound and stay above the 50, then this would just be a normal correction, and this could very well be another higher low. So it is at a very crucial level. We'll find out maybe next week, within a week or so, which way it makes the move. Does it break and then remains below the 50, in which case then I would expect lower prices. But if it's able to bounce back and then stays above the 50, then this could very well be weekly higher low. So it's at an important level, right? Important level because momentum can either shift to negative or continue to remain positive. Now, if we look at a SPY, just to see what those equivalent levels are. So for SPY, you can see that daily RSI has fallen below 50. So on a daily time frame, I would be cautious, because this is indicating to me that momentum is negative. You can see MACD is moving lower. You can see. So what are the levels we should be looking out for? So the near-term level would be this number around 392.50. That would be because it had traded between this and this zone, and now that this level is breached, a full measured move brings us to this level, which is around 392.50. Below this, the next level would be at the red line, which is around 386, and finally around 380. So those would be the levels. Resistance obviously would be around 405, and then finally to 418. So those would be the levels to look out for. But at the moment, momentum is negative. It has switched from being positive to negative right now. So that's worth noting. When momentum remains negative, usually the bias is on the short side. On a weekly basis, we'll see similar. Look at where RSI is, right at that important level. So we talked about S&P 500. So let's see what happens to RSI in the next week or so. If we look at NASDAQ 100, so what do we see? NASDAQ, similar story, but NASDAQ's momentum has just shifted to the negative side on a daily time frame. You can see MACD is moving lower, so I would be cautious here. So if you're long, I would be cautious. As long as RSI remains 50, I would not be on the long side. If I look at the levels to watch, so this is an important level, 11,520, because if you draw a fib from here to here, this is 61.8 fib level, number one. Number two is if it traded from this level to this level, right? So now that it has broken below this level, a full measured move of this distance brings us to this level. So this level has two support, one from Fibonacci, one from this measured move. If I look at the moving averages, so I'll hide the levels, you can see that it has lost the daily 20, but it is holding on to the daily 50 and 200. The question is whether it will breach. But if momentum RSI remains below 50, then I would favor more downside than upside. The only way it recovers the daily 20 is if daily RSI gets back above 50. So I would watch what happens to RSI, because RSI is now has changed direction. You can see right here, RSI switched from positive, momentum switched from negative to positive. So this would have been the time to go long when the price was around 11,108, and now is the time to exit around 12,000. So this is what, 11,001. So that's 900 points you would have received. Similarly, this is when there was a change previously, mid-December, when it turned negative. So time to go short around 11,740, and time to cover the short right here at 11,205. So that's another 500 points if you follow the RSI when momentum change from direction, either from positive to negative or negative to positive. So if we look on a weekly time frame just to see what we see, on a weekly time frame we see that, look at where RSI is, right at the 50 level. It's still above 50, 50.6. It is right at an inflection point. So SPY is at an inflection point, QQQ is at an inflection point. If I just bring in QQQ, you'll see on a weekly basis, look at where it is, right at an inflection point. And we'll see other markets. You'll see that all these markets are now at an inflection point, meaning either the momentum is going to shift from positive to negative, like in this case QQQ SPY, or they will bounce off this level and continue to remain positive. So when we get to the other markets, then you'll see what I'm talking about. So on QQQ, what are some of the levels to watch? So if we bring in the levels, So again, like Nasdaq, this is an important level, which is what, around 280. You've got the Fibonacci from here to there, and you also have the measured move. See, it had traded between these two levels. Now that this level is breached, the full measured moves gives us a price target of this level 280. Now there is a support before that, which is around 289. But with momentum weakening, I would not be on the long side, because you can see that RSI has fallen below the 50 level. So those would be the now if you look at Dow quickly. So Dow on a weekly basis, so this is Dow on a daily basis. You can see that momentum has definitely shifted to the negative, because it's now below, RSI is below 50 on a daily basis. If you look at it on a weekly basis, you can see RSI is now below the 50 level. It closed at 48.17. You can see this is where weekly RSI shifted from negative to positive. But look at what happened this week. Now we can see a clear shift from positive to negative. So I would be cautious on Dow, because Dow is flashing, warning sign, not just on a daily time frame, but on a weekly time frame also. We see momentum changing. If I look at IWM on a weekly basis, it's still above the RSI 50, so we're okay on the weekly basis. But momentum has shifted to the negative side on a daily basis. So time to be cautious on IW. So on the equity, all of the major averages, time to be cautious. Why? Because the momentum is shifting from positive to negative. It has happened on a daily time frame in all averages, but not so on a weekly basis. On a weekly basis, they are at an important level, at an important level. So we need a decisive move one way or the other. Let's look at dollar and see what we see. If you look at dollar, dollar has been going up. This is weekly. Look at where the RSI is. RSI has moved just above. So you can say that it's beginning to show signs of change in, direction, because it has been negative ever since it fell below the 50 level in early November. Now it's showing signs. It's at an important level. If it continues to move higher, then obviously we'll see higher prices. Last time when we saw a change in momentum was right here in June of 2021, when RSI crossed above the 50 level, and it remained above the 50 level until it fell below the 50 level in early November. Now, normally what happens when you see there's a change, you generally see a big candle like this. Look at right here, when there was a similar change from positive to negative, we got this big candle. When you see right here, when there was a change from negative to positive, you can see there was a big candle. So this week it printed a big candle. So it's showing signs that perhaps the momentum is changing for dollar. Now you see again, it's now at an important level. On the QQQ, what do we see? It's also at an important level. Dollar is now at an important level. It's either telling us that there is a change in momentum happening, in dollar. If that's the case, I would expect a change in stocks also, in SPY, in QQQ. If I look at gold, for example, on a weekly basis, look at where RSI is right at the 50 level, which is basically, again, you see it's been pulling back. It has now come back to this pivotal area. You can see this was a resistance, this is a resistance. So if it breaks below the 50 level, then momentum on a weekly time frame will definitely become negative. See again, you can see that it is at an important level. On a daily basis, the gold's momentum is definitely negative, because you can see it has fallen below the RSI 50 level in early February, and it's been, ever since that, it's been going down. But on a weekly time frame, it is at an important juncture, right? If you look at VIX, right, and look at what's on a weekly basis, where is VIX? RSI, it's now approaching 50. So you see VIX has been below the 50 level on a weekly basis from October. Now it's coming up to the 50 level. If VIX is able to get above 50, this would be a change in momentum from negative to positive. So you've got VIX at an important level, you've got dollar at an important level, meaning potentially changing from negative to positive. You can see gold at an important level on a weekly basis, potentially changing from positive to negative. You can see SPY, where is SPY? Here's SPY at an important level, potentially changing from positive to negative. You can see QQQ at an important level, momentum potentially changing from positive to negative. So you see all these markets are all at an important level. So we either see a full-blown shift from positive to negative in case of SPY, QQQ and gold, and the opposite for dollar and VIX, or all these markets, they bounce back. So they find support. SPY, QQQ, gold find support at the RSI 50 and they rebound because RSI 50, you can see, was a resistance right here, was a resistance right here. So it could act as a support. So one possibility is that it bounces off this level. If that's the case, then equities, SPY, QQQ and gold rallies, right? If they find support, you can see this was a resistance, RSI resistance, they find support, so then they move higher, and dollar finds resistance right here, right? Because you can see that this area was support right here, so this could act as a resistance, and it falls, then dollar falls, and then VIX finds resistance right there at this level, as it found support right here, and then they fall. So markets are at a pivotal level. We'll find out next week, within a week or two, which way they want to move, whether or not there is a change in momentum, or whether the momentum continues and the markets just bounce off either support or gets rejected of resistance. So I think next week or so would be very, very important. And if we look at some of the bond product, let's see what do we see. So if you look at, this is TLH, this is bond, you can see that it never was able to get back above RSI 50. This is on a weekly time frame. Ever since it fell below this level, it was never ever able to get back. So any rally was effectively a counter trend rally. And that's because the 10-year bond yield never fell below the RSI 50 level right here. This is 10-year bond yield. You can see that it found support at the RSI 50 level. Now it's rising. You can see it found support right here. Ever since it crossed above the RSI 50 level right here in December of 2021, bond yields stayed above this level. So which basically means that that you want to be short bond. You don't want to be long bond, because if you look at TLH or TLT, whichever, even if you look at TLT was never able to get back above the RSI 50 level. Once it fell below right here in December of 2021, it never was able to get back, So all these rebounds were basically counter trend rallies because they failed at RSI 50 level. So RSI 50 level is important. Any move above or below shows a change in momentum. And so far, ever since it fell below this level in December, it basically says that the momentum hasn't changed for bonds. So we should not be looking on the long side until such time as it's able to get back above 50 and hold it right there. Even if you look at HYG, which is a corporate bond, you can see that for a brief period of time, it went above the 50 level. But then it fell back below the 50 again. You can see ever since the bear market started in September of 2021, it's been pretty much on the downside. Any rally basically got faded. So this is HYG. If we look at some of the, let's look at oil. See, oil has been below the 50 level, so momentum has been weak. So right here in July of 2022, the weekly RSI fell below the 50 level. So the price of oil was at 105, and since then it has been below. So if you were short when this happened and remain short, you're still well in the money. Well in the money. And a lot of people talk about $100 oil prices. I mean, that's great. But in order for that to happen, RSI needs to get back above 50. You can see there was a rejection here in October. There was another rejection in end of October. So at the moment, I'm not seeing, any uptick in momentum. Not at this point. This is not to say that it cannot get back up above 50. I'm not saying that. But at this point, I'm not seeing it. If we look at some of the sectors, just to see what are they telling us, I'll go through the sectors. XLK, largest sector in S&P 500, it's above the 50 level. It's coming to that 50 level. So watch what happens there, whether it falls below and so a change in trend, or whether it bounces off this level. XLY, this is discretionary. You can see that it has dipped below. I'd be cautious right here. I don't like this lower high, so time to be cautious. If it's able to bounce and get back above RSI 50, okay, fine. But at the moment, it is below 50 and it has just made a lower high. So momentum is looking weak to me. XLF, financial. So it is above the RSI 50, so momentum is positive, but it's approaching a neutral level. If you look at healthcare this is the second largest. This is putting a lot of downside pressure on S&P 500, because it's second largest. Look at the weekly RSI. It has fallen below the, so this is more like this is the sort of thing that you see in bear market. You can see that since reaching a high of, in November, it's been basically gradually moving lower on a week by week basis. You can see weekly MACD is crossing and heading towards the zero line. This is not looking good. This is the second largest, so time to be cautious. XLC, communication. You can see that it had broken out, the momentum shifted in early January, but where it is now, it's right at the neutral zone right now. So if it falls below this level, that means momentum will again shift to negative. You see, from this point onward, momentum was negative until early this year. So we're at an important level. XLB, building materials, it's positive, going sideways. XLI, industrials. So it's now kind of going sideways. I'll be watching this 50 level, especially since Dow has fallen below its 50. I'd watch this RSI on this sector. XLU, this is definitely negative on a weekly basis. XLP, this is kind of neutral zone, kind of hanging around. It's below the 50, but it's hovering closer to the 50 level. So it's, you might say it's more negative than positive. Yes, I'll accept that. XLE, energy, it's at a neutral zone. Anything can happen. Either it can bounce up or it can fall below. Then, we would expect negative outcomes. XLRE, this is real estate. Look, it has fallen below 50. So it's showing weakness as interest rates are rising in the market. So, real estate transactions are going to become more and more expensive. So it's being reflected in XLRE. If you look at SOX, semiconductor, this is still in positive territory. Strong run up. RSI was, overbought. Now RSI has been pulling back. It's still above the 50 level. So there is some room here. So this is still positive. This is biotech, not looking good. RSI, weekly RSI has dipped below 50. So I'd be cautious on biotech. TAN, this is solar, weekly RSI below 50. I'd be cautious. Bitcoin, weekly RSI is holding above 50. So this is looking good so far. The weekly RSI hasn't, it's still above the 50. It crossed above this level. What was the level? It was around 20,880 when it crossed above. Where is it now? 23,018. So if you went long right here, you're still up, a decent amount of money. This is when, previously it changed momentum. Bitcoin was, what level was it? This was 49,500. 49,500. Now, if you covered your, so you would have been short around here, 49,500. You would have covered your short right here, around 41,280. So you would have made 4,000 points here, and then you would have gotten, you would have been short again here, 46,400, and you would have covered your short right here, 20,000. So you would have made big amount of money. Even here, if you went long based on change in momentum, you're still up, 2,000 points. If you look at, let's see, we've looked at DXY. If you look at euro, look at where euro is. Euro is just coming right to this level. So the point I want to get across is this: markets are at an inflection point. If you look at SPY at an important RSI level, QQQ at an important RSI level, gold at an important RSI level, dollar at an important RSI level, euro at an important RSI level, VIX at an important RSI level. Something we'll find out within a week or so if there is going to be a change in momentum or the current direction remains as is. I'll leave it at that. Thank you very much for watching the video. If you like the content of this video, please consider subscribing, sharing. Thank you very much.